I just talked that entire time. Nobody told me. No, I'm just kidding. You guys told me the entire time. I literally just talked for like, what, 5 whole minutes? And I was mute. Anyway, guys, we're just gonna breeze by that. We're gonna breeze by that. Do it over. Okay, I'll do it over. Welcome to the afternoon stream, and thank you so much for giving me 100 likes so we can come back this afternoon. God damn it, I'm not gonna be able to remember everything I said. It's impossible. Anyway, overall, what I was saying was paying attention to the 30-minute rolling up. You know, this is saying we can have some upside, but if I pull up the 15-minute, it looks a little bit flaggy, building up towards the center line. But overall, I just wanted to say we're right in the middle of the range. So if you wanted any kind of hint which way this could be leaning probabilities-wise, well, 50% chance down, 50% chance up. So kind of a wild time. But you are seeing some signals like AMD showing some good stuff up here, right? Showing some good structure, maybe wants to go higher. Things like that. But I mainly wanted to talk about volatility, right? Volatility, I just wanted to show you on the 30-minute how it's close to that center line. So we could see that volatility come in one more time. Will that get us above 20? That's the big thing. So if this thing starts to go above 20 and then fades, I won't be too worried for the stock market. But if that thing gets another 15% jump, then it's going to look a little bit scary for the stock market. But we're going to pull up that stream. We're going to keep our eye close on these yields. And I wasted my big intro there for a little bit. But with the SPY, the last thing I was saying is, well, one thing is we took back the moving averages in the 5 minutes in positive territory. So let's do a little something I like to call see what happens. All right, let's pull up that stream real quick. We've got right here. All right, please stand by. I'm standing.
With Canada. Now, a lot of the discussion about the U.S.-Canada relationship tends to focus on its importance for Canada. Trudeau the Elder's famous comment about sleeping with an elephant. But Canada is our largest export market. Almost 20% of everything that we in the United States send abroad into this world of 8 billion people goes to the 40 million people in Canada, who are only 1/2 of 1% of the world.
I love it. Everyone just laughed at me.
It is the largest and most comprehensive two-way economic relationship among any two countries in the world. The evolution of the energy economy of global importance will be heavily influenced, perhaps determined, by decisions that our two energy-producing nations make. We have a unique role
Any Canadians in the
advanced
chat?
Financial economies, using a lot of energy, but also significant energy producers, and can balance the effects on economy and society of the choices that we make. And on top of that, Canada is a key U.S. ally in the international financial architecture. I've spent 3 different tours of duty in government service, where a big chunk of my job was international financial diplomacy, and we could always count on the Canadians being sane, solid, and punching way above their weight. And yet the U.S. tends to take it for granted. And my experience in life is that things we take for granted, we tend to mess up.
No,
so my hope is that with this series of events, we can be part of helping focus folks in the United States on the importance to the U.S. of this relationship by finding speakers and topics that will have a very broad appeal beyond the usual suspects who focus on our relationship with Canada. And we certainly have that with our event today, which includes 3 of the most significant economic
Nothing
leaders
like working with a country for years and then them having to say
Bill Murnau,
we're important.
Our moderator
today, proved
today
yourself as important, bud.
Well, when you look in Wikipedia under Renaissance Man, there is an inset photo of Bill Murnau and nobody else. Recognizing his significant achievements across politics and policy and business and philanthropy, he's the former finance minister of Canada, playing a key role in shaping sustainable economic policies of the Trudeau administration, including Canada's economic response to COVID-19, and a key reason for Canada's aforementioned above-weight punching in international diplomacy. As a business leader, he grew the multinational human resources firm Morneau Shepnell from a family business to over 4,000 employees
about to
and the
cross
largest
down
human
on the
resources provider in Canada.
for volatility.
As a philanthropist, he's worked to support the arts, help
if we're
at-risk
see
youth,
volatility, it probably
improve
has to
access to
ramp up
healthcare and
soon.
education all around the world, including founding a school for Somali and Sudanese girls in a UN refugee camp in Kenya. And as a policy thinker, in addition to his role chairing this Washington Forum, he's chaired the C.D. Howe Institute, a leading Canadian think tank, and has written Where to From Here, a policy book that I assure it is several cuts above the typical former official's post-service book. I put it up there with Robert Rubin's In an Uncertain World. Anyone who has ever served in any government of any country at any level at any time will immediately recognize the honesty and intelligence and savvy that he's brought to thinking about the lessons of his time in office for the issues facing Canada and all of us. I highly urge all of you to read it.
Are we kissing ass right now or what?
Tiff Macklem is the governor of the Bank of Canada, and another of the reasons for Canada's substantial above-weight punching in the world. In addition to his role as governor, he's the chair of the group of governors.
I'm going to be checking on gold and stuff on my left screen.
That's the oversight
what up, JS?
Body of the Basel Committee, rather high profile these days, and he is co-chair of the Financial Stability Board's regional consultative group for the Americas. He's a distinguished economist, having headed the most important division of the bank's economic staff in the early 2000s, having played a critical role in Canada's response to the great financial crisis in his post in the Canadian Finance Ministry.
Gold, I don't like that trickle-up buying.
He's been a senior deputy governor of the bank from 2010 until his appointment as governor.
Like we want to
He's also been a distinguished academic, having served as dean of the Rotman School of Management at the University of Toronto.
It's strong.
Our final panelist is Jerome Powell, chair of the Board of Governors of the Federal Reserve System. It is a weird task to introduce Chair Powell. It's like introducing Henry Kissinger. How do you do it without looking absurd? His doctoral thesis on Metternich received very high marks. So just let me say this. There is an anteroom off the main boardroom in the Eccles building, which is the Fed's true headquarters building. They're currently slumming it in an annex, where the portraits of all the Fed's chairmen hang. And as you look around them, it is borne in on you that none of them will have been as consequential across as broad a range of matters as Jerome Hayden Powell in managing the remarkably low inflation and high employment of the pre-COVID period, in the world historical response to both nationally and globally to the COVID event, in the first major review and explanation of a formal monetary policy framework for the Fed, and in managing the quite effective response to the most significant inflation in almost half a century.
Effective?
But one in which many of the traditional guideposts could not be helpful, requiring very creative thinking and deft management of the extremely well-meaning but hydra-headed body that is the Federal Open Market Committee. So with that, let me thank you again for coming, and let's turn to our panel.
Well, I want to start by thanking you, Randy, for that very, very generous set of introductions, and also for your willingness to step forward as the co-chair of the Washington Forum on the Canadian Economy. So we very much appreciate your esteemed leadership, and one of the key reasons we're here today is due to that. So really appreciate it.
A real review.
I'll just say personally, one of the things I liked most is you said Canadians were sane. So that's a pretty good starting point, I think, for our discussion here today.
Justin, don't
with
start
two esteemed
with me.
panelists, I won't really be speaking much. I want to give both of you gentlemen an opportunity to talk a little bit about your respective economies. And I guess also recognize that we're here to talk about the Canada-U.S. relationship and what is both distinct and different about our economies, but also what we
Divergence
share.
on Bitcoin
So
showing up right
maybe
here on a
with that, I
2-hour.
could start with you, Governor Macklem, and then we'll talk to Governor or Chair Powell.
Well, thanks, Bill, and
Bill.
you better call me Tiff. It is a pleasure to be here, and thank you and Randy for launching this, for inviting us both. I am very pleased to be here to say a few words about the Canadian experience, and I always enjoy comparing notes with Chairman Powell. Now, as Canadians, we invariably compare ourselves to Americans, and maybe it's human nature, but we tend to focus on the differences. We've got different systems of government. We're bilingual in Canada. We have 3-down football, and we even have very colorful polymer banknotes. And certainly
Canada,
our climates, I think, are certainly.
These guys are all making it like a
always
joke.
welcome,
I would not
first
do that if I'm trying to show myself as an important partner.
Our economies obviously have much in common, but again, we often focus on the differences. If you look at growth in Canada and the United States over the 20 years leading up to COVID, remarkably, the average was exactly the same, average 2.2% in both countries. The sources of growth, though, have been a bit different. In Canada, we've grown more by adding workers. Our participation rate has risen more, and we've had proportionally higher rates of immigration.
And now we have a
In the United
housing
States,
crisis
adding
because of
workers has
that.
also been important.
Canada has a terrible
But
housing
increase in
crisis
output
right
per
now.
worker or productivity has made a relatively larger contribution. And I will admit, in Canada, we look at U.S. productivity growth with some envy, and we do ask ourselves, I mean, what can we learn from the U.S. experience? We are concerned about productivity growth in our country. Turning to the financial system, we both have strong banking systems, but the structure of our banking systems is quite different. In the United States, you've got a lot more banks than we do in Canada. In Canada,
Why do I feel like this guy's going to mention cats?
5
My cat.
large national banks and a number of important regional players. The structure of our
Then the
mortgage
market
market is
crashes.
also somewhat different. In Canada, the typical mortgage is 5 years. In the U.S., typical mortgage has a term of 30 years. And our banks in Canada tend to hold mortgages on their balance sheets. U.S. banks securitize a lot of their mortgages. Despite these differences, our systems are very integrated, and indeed, a number of large Canadian banks have large operations here in the United States. Our pandemic responses were also mixes of similarities and differences. You know, broadly speaking, the paths of our two economies were pretty
That'd
similar.
be a nice review.
We both cut interest rates very dramatically to effectively zero to support the economy through the pandemic. Then we both raised them very forcefully as inflation rose rapidly, and we've both seen inflation come a long way back. Growth has been more resilient in the United States, though, through this tightening cycle, and I think that's partly related to the stronger productivity growth I mentioned in the United States. And it may also be related to the fact that monetary policy may be having a bigger impact on households in Canada because of the different structure of our mortgage market. More of our mortgages have reset in Canada, so more people are feeling those higher interest rates. And that has restrained household spending more in Canada. You know, in each of our countries, I do want to underline that, you know, we gear our policy decisions to our domestic monetary policy mandates. And in Canada, we have our own currency, we have a flexible exchange rate, so we can run our own monetary policy. So, simply put, you know, we don't have to do what
I'm just saying, if this guy was in jail, he'd have his hand in another man's pocket. 100%.
I do think, though, we're looking at the same things and asking ourselves the same questions. I think we both need to feel confident that we're clearly back on a path to 2% before it would be appropriate to reduce interest rates. Last week in Canada, we held our policy rate at 5%, where it's been since last summer. We did stress that we are encouraged by the recent progress we've seen on inflation, and we want to see it sustained. And just this morning, Statistics Canada published the March CPI. As expected, headline inflation came in close to 3%. We have seen gas prices in both our countries move up. Importantly, though, measures of core inflation did tick down again, and that does suggest that underlying inflationary pressures are continuing to ease. So we continue to be moving in the right direction. The other thing I want to underline is that in the conduct of monetary policy, we do spend a lot of time
carbon tax is such
and
BS.
What is going on in the United States?
No, not yet.
Has a very
After this
big
guy.
impact on the Canadian economy. We also watch the U.S. economy closely, particularly through the extraordinary period we've all been through in the last few years, because the more we understand what we have in common and our differences, the better we can learn from each other's experience. And let me just close on a few words on just how integrated the Canadian-U.S. economy is. And Randy, you highlighted some of the key facts. I would totally share your perspective. I think the economic relationship really is the model for mutually beneficial open trade and investment. 77% of Canadian exports flow to the United States.
Jerome talked before he went on stage.
As you underlined, what less people know is that Canada is the United States' biggest export market. 17%, or as you said, almost 20% of U.S. goods.
Said he got a nice pump in this morning, and then he took a nice dump after.
There's a similar two-way dynamic. In 2022, more than half of Canadian FDI went to the United States by far the largest share of our FDI. That was roughly $43 billion. In the same year,
yeah, I love how he says $43 billion
of U.S. FDI came to Canada. So it's a pretty balanced relationship. And I think what these numbers underline is just how close that economic relationship is and how it works in both directions. And the final thing I'll say is when you look forward, we face many of the same structural challenges. Our labor forces are aging. There's going to be a big challenge with new technology, training, and making sure we have the skilled workers our economies needs.
Your
Climate
education
change
system
is
is
affecting
so good.
both our economies. We're both grappling with shifting trade and investment patterns globally. Supply chains across both our countries need to build more resilience. Conflicts internationally are increasing global uncertainty. And for all these reasons, I am very glad we're having this discussion. We do have much in common. And Randy, as you underlined, when we work together, we can get a lot more done. Thank you.
Sorry, I bumped my computer.
Well, thanks.
When we work together, we can get a lot more done by putting lower class in
worse
worse
start,
situations
Jim,
and giving rich people
really
more
interesting to
money.
hear your perspective.
Another place to start is to say, why don't you call me Jay and call Tiff?
Okay,
Tiff.
I know I do it behind the scenes. I'll do it in front
Okay.
of the scenes, too.
Great. So let me start by thanking Randy and Bill and Xavi for this.
Spy
It's great
selling.
to be here today. I want to echo what Randy said about the mutually beneficial, respectful, great relationship we have with Canada, economically, culturally, and I'd also like to echo, I thought Tiff did a great job talking about the similarities and differences in our economy, our financial markets, the challenges we face in our policies.
People don't like seeing
It's
his
almost
face.
as though you somehow had a copy of that part of my remarks, Tiff. So
Yeah, why are
I'm
they
not going
laughing?
to repeat that. But what I will do is talk, if I could, a little bit about the U.S. economy and where we find ourselves right now.
Yeah, let's
So,
talk about that.
as I think Randy pointed out, the performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses
breaking the
indicate
low.
a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall
15-minute
picture for the
hasn't
labor
curled
market
down
is one
yet.
of real strength, but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. You know, we took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face, If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Well, thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got into public life was how often I saw my international peers as we moved around. And when I see the two of you on stage together, I know that often you see each other at G7, at G20 meetings, and I think it would be quite interesting for the audience to understand, how collaboration happens or doesn't happen internationally, how central banks work together or don't work together. So, maybe I could ask you, Jay, to give a perspective on how that happens from your vantage point.
Sure. So to give you an idea, we do meet quite regularly. So Tiff and I attend 2 G7 meetings per year for ministers, that's finance ministers, and central bank governors. We don't attend the leaders meeting, but we attend, in the United States, but we attend the meetings with the finance ministers, which Bill was, and also 2 G20 meetings. So that's 4 meetings per year right there. We also have 6 meetings at the Bank for International Settlements in Basel. One of those is now virtual, but we're in, and that's only central bankers, no finance ministries. So it's all central banking stuff. And, it's economics, it's financial regulation, all those things. We also come here to Washington, or every third year we go someplace else twice a year for the IMF World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question.
I mean, so far it actually has seemed bearish, but he said some bullish stuff. Like they have plenty of room to cut if they want.
About what's going on in their own economies and their own financial markets, their own regulatory world, with each other, and we're also talking about the big global issues of the day, as you would expect. So, some of which are really the business of the elected government, not the business of the central bankers. But we have that discussion. It's more or less ongoing. We're seeing each other all the time. They're very informative, these discussions, and they really are, for me anyway, part of the way that I get to thinking about what the right policy is for the United States, is to hear what is going on around the world, what's happening globally, and how are people thinking about that. So it's very, very useful, particularly, though, given our close cultural, financial, and economic ties with
could double
Canada.
Top here.
Those discussions are especially fruitful and important, and I have regular conversations with Tiff. By the way, I do keep very close track of the actions of the Bank of Canada. I read Tiff's press conference transcripts carefully and pay close attention to that.
As of right now, VIX
mentioned the similarities
tipping over
and differences.
on the 2-hour MACD.
I'll say one more thing, which is we go to Basel, as I mentioned, 5 times a year. You're a long way from home, and we're there for 4 or 5 nights, and there are usually 1 or 2 nights off. So we go looking for someone to have dinner with, and very frequently we wind up with the Bank of Canada delegation who are really good and very funny and a lot of fun together. So we have a very close relationship with the bank and great respect for that institution, as I'll have a little more to say about.
Someone just
lately.
defaulted on their house loan and is
One other
homeless.
thing I'll point out, though, about our relationship is
very funny.
We did do, as Randy pointed out, our first review of our monetary policy framework really ever. And we looked around. The Bank of Canada also does regularly. I think it's every 4 years.
Douglas, you have it spot on.
We
you need a recession.
Looked to the Canadian model and other models of how to do that. We talked to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop there.
And Tiff, similar perspective from Canada?
Yes. I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts about this job is we do, the international community, the central bank.
Good job, Johnny.
It's not like a commercial bank where you're competing against the other bank. We're all in this together. And if we get it right, we all help each other.
Depends if they pump money in or not. Review.
There is a considerable openness. And, as Jay outlined, I think there's a few different functions. Yes, we Obviously, if you're in Canada, we have
No,
our
you're
own
good, Douglas. That's
group at the
how
Bank
it
of
is.
Canada that analyzes the U.S. economy, forecasts the U.S. economy. It's very important to Canada, but the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to say is incredibly valuable for us. The other thing we do, though, is it's more than just the data and the forecasting. It's thinking through the scenarios together. What risks are on your mind, Jay? What do you think could go wrong? What are the scenarios? How would we handle it if this happened, if that happened? Being able to put your heads together and think through the risks, the scenarios, the strategy. There are also a number of really, I would say, sort of behind the scenes, very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately, those are things most people don't have to worry about. They are critically important for the implementation of monetary policy.
I say it all the
and
time,
that sort of
Simon.
Plumbing, working of the financial system, and being able to talk to people who are
Review.
thinking about these things as much as you are is hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The obvious one would be financial supervision and regulation. Our financial systems globally are highly integrated. We were deeply reminded of this in the global financial crisis.
If he's cutting rates suddenly, it would be because of a
crisis. What happens in
crisis,
other countries
most
affects
likely.
all of us. And money flows across borders.
Bond market, flight to safety.
We have to do that together, or it's not going to work.
Well, maybe we can drill into that for a minute. Obviously, we
Yes.
recognize that most of your work is focused on the domestic markets. But in times of crisis, there's real challenge. As you mentioned, in the COVID period, the global financial crisis, that you were engaged with, Tiff, earlier in a different stage of your career. And for me, it was remarkable the number of interactions with counterparts around the world during those crises. So maybe a question to both of you is, what kind of interaction happens during periods of crisis? What doesn't happen? Are there things that we should be thinking about differently in order to prepare ourselves for those challenging moments and making sure that the financial system is resilient? So again,
Fix
maybe
them out to make
over
a new
you,
low,
Jay, to
if that happens.
react to that and hear your thoughts.
Sure. So,
Questions?
our economies, our financial markets, all of our institutions are deeply intertwined. And when there is a situation where there's serious stress, you need to get a global perspective. You need to get perspective around the world. And you have to do that very quickly. And we, of course, can move quickly and effectively on the domestic front. But what the thing that you figure out in those times is that all the time you spent at Basel and at the G7 and G20 meetings, your colleagues, you know and trust and respect their judgment, and you don't have to go through that phase of gaining trust in people. You understand each other, you speak the same language, so there's a lot of communication. The level of communication is pretty high anyway, but during crises it goes very high. I'm constantly talking to other central bankers around the world, and also political leaders in our government, and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that people are looking at, and you're talking about that. So it's very useful. I say one thing to point out is it's less about coordination than it is about talking and understanding, for one reason, or at least it was during the pandemic, and that was because almost every country's interest rates were very close to zero when the pandemic hit, and so there wasn't policy space for most economies, most central banks, to do a big coordinated rate cut. We did cut very quickly to zero, but I think we were higher than almost any other nation in terms of where our policy rate was. But anyway, there's a lot of communication, and those relationships that you built up really do help at that point. In terms of you asked about learning, what have we learned? I think that the pandemic's going to teach a whole lot of lessons over time. I still think it's too early to say what they are with confidence, and I'll point out, the pandemic has surprised us over and over again, most recently in the United States, the remarkably strong performance of the economy at a time when virtually all economists were expecting a recession. So I think if you'd asked for the lessons of the pandemic a year and a half ago, you'd get a very different answer. Now, I think in a year or so, we'll have a lot more answers. It is a unique set of circumstances, and we're still learning, I think. But we will try to learn those lessons. Different point, I would say, about the bank stresses, another crisis, at least here in the States. I do think we can and have learned the lessons of the stress of early last spring. And I would point to a couple things that we embraced pretty forthrightly. One was that supervision was not tightly focused on the right things, was not proactive enough, was not forceful enough, and we've tried to take steps to remedy that. I also think there will be some regulatory initiatives for banks of that size and with those characteristics in time. So I do think those are lessons that we have learned.
And from a Canadian perspective, similar lessons or different ones?
Yes, I think there are similar lessons. Maybe I'll just give a couple of other examples.
Nobody cares.
First, though, I will just underline, when a crisis hits,
nobody cares about this guy. Increasing rates, it makes them so it's harder to borrow. So they don't want to make more money. They don't want to borrow more money, and their interest is worse. So they don't want the interest rates higher. But overall, interest rates rising is to clamp down on the growth of the economy itself in general. So really increasing rates would fight inflation, not cause inflation. What would cause inflation is if we cut rates too soon. So if they would cut rates and we continue into a strong market, that would be bad. But if we cut rates during a crisis, then the crisis will cause the recession, and inflation should be taken care of.
It works for most parties, but not one party. And in a crisis,
that's why you need a recession.
It's the weakest link that can take you down. So you've got to be careful. It also, I think, boosts confidence in the system. If we're acting in a way that is coherent together, it boosts confidence. It looks more like a plan than a haphazard policy response. Just to give you a couple of examples, I wasn't actually governor at the start of COVID. Jay was there. But certainly looking at it from the outside, the coordinated actions of major central banks to reopen fixed income markets, providing liquidity, providing market making of last resort in scale. It reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted. If that had not happened, this crisis would have been a much deeper and more severe crisis. And then the other one I'll highlight is
so we propped it up
with
fake money.
Came out of COVID, by all being resolute in our commitment to restoring price stability, by all matching our words with forceful action, raising rates rapidly, we all helped each other. I mean, it helped reduce global inflation in goods, which was really the first part of the inflation surge, and it helped keep inflation expectations in all our countries better anchored. And I think it is a key ingredient in how we have all managed to get inflation down a long way back without causing recessions in our economies. And the last point I'll just highlight is something you said. Occasionally this coordination is very explicit. So, for example, at the time of the global financial crisis, there was a coordinated G7 interest rate.
This guy is so proud of not having a recession. That's like blowing up a $10,000 Robinhood account and then just going and taking out a loan for $10,000 or $20,000, adding it to the account and be like, I'm still good. That's what he's proud of.
And we're sharing information, and that leads to a coordinated response.
Well, maybe you could spend a little bit more time on that from the Canada-U.S. perspective. So Randy mentioned in his opening comments the idea that when you're in Canada, you're living next to an elephant. And I think a lot of Canadians would assume that Canadian policy has to take into account U.S. policy. So maybe could you give us a perspective on how important that is for your deliberations and how that factors into decision-making, the U.S. approach?
Well, look.
It'd be a top for gold right here.
It's pretty clear that our U.S. economic relationship is by far our most important relationship. Our economies are highly integrated. 35% of our GDP is exports, and 75% of that goes to the United States. So multiply, that's a big chunk of our GDP.
Yeah, we import everything.
Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York Stock Exchange, and all over are cross-listed Canadian companies on many of the screens. Our financial systems are very integrated. Our banks have most of our large banks have operations in the United States. Our pension funds are big investors in the United States. So we do spend a lot of time understanding what's going on, trying to understand what's going on in the United States and looking at the implications for Canada. There are, though, I highlighted in my opening remarks some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors. But the commodity sector in the Canadian economy is quite a bit bigger than it is in the United States. Oil and gas, agriculture, forestry, mining, fishing. 40% of our exports, 13% of our GDP. And the commodity cycle can be quite different. And we have a flexible exchange rate that does help absorb the differences. And I think it's an important reason why historically sometimes our monetary policy do differ. Our cycles are often quite similar, and certainly through COVID we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where, particularly if the commodity cycle is different, you'll see monetary policy diverge somewhat from the United States. There are limits to how far it can diverge, but as I emphasized, we have our own currency, we have a flexible exchange rate, and that absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S. has an outsized role in the global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, and how much do you think about what's happening with global markets as you come to your conclusions?
So I'll start by saying that each central bank serves a domestic mandate, which is, in the case of Fed, is using our tools to achieve maximum employment and price stability for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on not just on Canada, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of all of that. And for one thing, we try to be very transparent and predictable, given the flow of data and events. I mean, you have to move quickly sometimes, but we do realize we have a special obligation to be predictable and transparent, and that benefits us in doing that as well. So international spillovers, of course, are an important consideration. We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum employment here in the United States.
And is that, have there been changes in this current cycle that have driven any differences? I mean, you've talked about the different drivers for inflation this go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation, I do think this is different. This is not simply the more standard case of overheated demand, which has been the typical thing in the post-war era for the U.S. economy and other major Western economies. There are similarities and differences, and I would characterize it this way, that the inflation that arose suddenly really in the early part of 2021 as economies reopened resulted both from constrained supply and also elevated and rechanneled demand from services to goods.
And money.
So if you remember, and I'm
demand
sure
come
will,
from?
there were unexpected widespread shortages and supply chain failures on a scale not seen in recent
Guys are
memory.
just liars,
In
dude.
the U.S., several million people had left the labor force, creating a severe labor shortage that was more fully felt once the economy reopened, leading to a huge spike in wages, but also in the ratio of job openings to unemployed workers. So very unusual situation. Households had elevated levels of savings, and demand was very, very strong as well. So we thought, what's different is...
Demand was strong because you gave people money.
Have thought, since we've understood the situation, that restoring price stability would require both the unwinding of the pandemic-related distortions to both supply and demand, as well as the effects of tight monetary policy on demand, which would give the supply side time and space to recover. And we think today that we're seeing those two things working together to bring that end about. And you saw that, I think, in 2023, which was really, in a large way, a supply-side story. What happened was the supply side really recovered in 2023. We thought that it would recover in 2021, and in 2022, I was beginning to lose hope. And then in 2023, you saw the shortages and the issues with the trade pipelines not fully resolved, but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people who had dropped out of the workforce, but also from immigration. So that was the year of the supply side recovery. And you saw the core inflation rates drop by 2 full percentage points in the face of very strong growth. So that can only be explained by the enormous increase in potential output, the supply side increase over that year. So that's how I would say it's different this time.
And Tiff, maybe you can tell us how it's different in other ways in Canada. So we were talking about the similarities and the similar approaches to dealing with inflation and the positive results. But we've seen a divergence in Canada with respect to growth. So clearly there's some.
Did he say divergence?
Maybe can you reflect?
Where's the divergence
for people? What those differences look like and what the ramifications are for you?
I'm a divergence guy. Where is it?
Yeah, I will focus on the differences. Although I will stress, I think the main story is the similarities. And as Jay outlined, what is so unique about this whole cycle is that supply has played a much bigger role than we're used to. And from a monetary policy perspective, we don't have as good line of sight to supply as we do as demand, and we don't have any tools to influence supply. Our tools work on demand. In terms of what has been different, if you look at the Canadian economy, growth was essentially zero in the second half of last year. And what that meant was the economy, which was very overheated, supply caught up with demand. In fact, it more than caught up with demand. The economy moved into excess supply.
Look back in 10 years, Roma.
And we're now seeing the effects of that in terms of relieving price pressure. So, why did demand slow more in Canada and the United States? I think that is a difficult question. I pointed to a couple of things in my opening remarks. I think productivity growth in the United States has been a lot stronger. You've gotten more supply than we have, so you've been able to grow more with less inflation or less inflationary pressure. And then the second thing is I think monetary policy is having more traction in Canada because the structure of our mortgage markets, half of mortgages have renewed in Canada.
I think NVIDIA looks good at
even
450.
if your mortgage hasn't renewed, it's renewing in the next couple of years probably. So you're thinking ahead, thinking, when it renews, I'm going to have to be paying a lot more on my mortgage every month, so maybe I should be saving more money now. So we're seeing that effect. We've had weaker consumption growth.
I'm listening, but I'll be right back. 2 seconds.
And certainly that's been somewhat masked by the fact we've had very rapid population growth. But if you look on a per capita basis, you can see household spending per capita, per family, has actually gone down, even though growth has not been negative overall. I think moving forward, we are actually seeing growth starting to pick up. The first quarter of this year looks pretty strong. We'll probably see some choppiness quarter to quarter, but overall we think that strength we're seeing in the first quarter will be sustained through the year, where we think on a quarterly basis growth is going to be averaging about 2% per quarter through this year. That's partly we're we expect to see, we're starting to see some pickup in consumption. Partly it is the resilience of the U.S. economy that is supporting our exports. They've been very resilient. And then coming back to inflation, I think those, broadly speaking, the path of inflation is pretty similar, but you are seeing, I think, some of those differences in the dynamics of the real economy in inflation. You know, our last few inflation readings have been reasonably good, even though totals still close to 3.
We're back.
Core has been, the last few times ticking down, and if you look at the more timely 3-month measures of core inflation, there is some downward momentum in underlying inflation, and I think that reflects the fact the economy is in excess supply, and that is relieving those price pressures. We're certainly looking for evidence that's going to be sustained. That's what we're looking for right now.
Well, I know that both of you realize that one of the key things we were trying to emphasize today was the importance of the Canada-U.S. relationship, and I also really appreciate all of the comments on the importance of trade to both of our economies, trade between our two countries, and foreign direct investment. And so, while you're not trade policy experts, and I get that your organizations, that's not the focus, I really appreciate you giving us a little sense of, how do you think about trade in economic terms and the importance of that, and how that factors into your economic outlook. And specifically, we're thinking about the importance of the agreement between the United States, Canada, and Mexico, and wondering how you think about that in terms of its impacts on trade in general, on labor markets, on supply.
We are over 4,500 subs. Thank you, guys.
Give us any reflections that you might have on that and deliberations impacts.
So I guess I need to start by saying we don't do trade policy. We don't really comment on trade policy other than to say that it's clear that we have a mutually beneficial, large, substantial, ongoing, healthy trade relationship with Canada that we very much welcome. Maybe I'll add one more thing, which is I want to focus on a particular export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough of it, and that is Canadian comedians and comic actors. I started to count.
Are we being for real
the number
with this
of really
right now?
great, funny people. I limited myself to 10. So Jim Carrey, Martin Short, John Candy, Mike Myers,
That's
Norm
such
Macdonald,
a
Rick
random
Moranis,
distraction.
Dan Aykroyd, Catherine O'Hara, and Andrea Martin. And I could go on.
But I think he's trying to give the vibe of like he's not worried at all.
Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
Sucking Canadian.
That's a small but important part of our trading relationship, I guess. Tiff, all jokes aside, any comments from your perspective?
Yeah, well, first of all, as Jay underlined, we don't set trade policy, but let me just say, try to give you more of a picture. I mean, first of all, you just look at our two countries. The east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country.
They're going to be on a boat.
And that's really
Wagyu beef
comes down
later.
To geography in some sense. I mean, that's fundamental
They'll be
to
eating
the
ramen
interties
noodles
we
and
have
cereal
across our countries. Many Canadians are closer to fellow Americans than they are to fellow Canadians. Just the nature of the geography.
4 other dudes
you look
in the
at
same
what
room
are
in
the things
Canada.
that we buy and sell? Well, some of the biggest things. In Canada, we buy a lot of your consumer goods in the United States. We have a very two-way relationship on motor vehicles. You buy a lot of the motor vehicles we produce. We buy a lot of cars and trucks that you produce. Similarly, energy. We're both energy producers. It often makes more sense to trade the energy north-south than to ship it across the country. So we have a very dynamic two-way energy relationship. And you look forward and you think about how much electricity the world's going to need. I expect that relationship is only going to grow. Another element that is growing quickly, and maybe that's partly comedians, is the fastest growing part of trade is trade and services. Now, if you want a haircut, you still have to do it in your own country, unless you want to go to New York to get a really fancy one. But but increasingly, a lot of services are highly tradable. The internet has completely changed how many things are delivered, and so you're seeing Canadians are increasingly importing a lot of commercial services from the United States. And then the final thing I'll say is on U.S. MCA. Obviously, for both countries,
what I see is
the market access.
We take 62% import.
The other thing I would underline, though,
they only
it's
take
also
like
the certainty
40%.
about the market access. The certainty that American companies have that they'll have access to Canadian markets and Canadians will have access to American markets. That allows businesses to make investments, to deploy their risk capital, to commit to the future. And it's that certainty of access that is really key to building investment. I'll stop there. Thank you.
Well, I'd like to thank both of you for taking some time with all of us.
That was it?
If we had looked back a couple of years ago and reflected on what we were
if that's
thinking
it, we're going
back
down.
then might be the trajectory of our economies, we probably wouldn't have had an expectation that we would have been where we are today. We would have
We'll stick around a little
expected
bit
more
and watch the
challenges
reaction
than
after.
we
If that's
faced.
it.
And I think we need to recognize that the stewardship that the Federal Reserve in the United States and the Bank of Canada in Canada have
A carbon tax is real good stewardship, isn't it, Canadians?
Difference in citizens' lives. I mean, we're in a situation that is virtually our best case scenario. So it's probably not often enough that on stage you're recognized for that important work, and I want to thank both of you for all that you're doing for all of us in making that the reality. And also I want to thank you for taking some time here. I mean, we are reflecting on the fact that in a couple
I'm saying
of years,
it's probably down because the trend will
the
most likely continue
US-Mexico
if you
Canadian
don't see
trade agreement
positive reaction
will be
here.
looked at again, and we want to reinforce the importance of working together, the importance of collaboration and cooperation, and really great trading relationships. So this is an important way for us to start this off, seeing the collegiality between the two of you, knowing how well people work together is really important for people. So thank you very much. And
SPY goes up.
It's a busy week for you. So
we see Jerome Powell's beautiful face. SPY is right in the middle.
From the Canada Institute, I'm going to ask Xavi Delgado to close off our session today.
Thank you, Bill. That concludes today's program,
Thank
everybody.
you, Bill.
Thank you all, everybody
bullish.
in the room and online for joining us today.
I wish he just said bullish.
Thanks to our
Shut up. I wish that last guy was like, by the way, everyone that is trading stocks right now, you can take all this as bullish, even though pretty much the argument for right now would be the trend that we are going through on, say, a 30-minute is going to continue. What is that trend as of right now? It's down. Okay, so that was the weirdest talk we've ever watched on this channel. Like, I don't even know how to respond to it. We were in the middle of talking about monetary policy, and then he said, like, asked him a question about Canada, and he just goes like, I love Canadian comedians. I'm like, okay. And like, it's just weird to me. Yeah, I don't know, but I think maybe let's try to make some sense of it. One thing is, we are curled up on this MACD. We can see a positive move come from here just because we get momentum shifting up a little, but we could just flag out. We could get some kind of resistance at the monthly, daily, see that drop off. But did we get anything here that's really going to send stuff to the moon? Probably not. Like, this seems like a nothing burger, and then you look at this. This just looks like a flag, if you've ever seen one. You know, that just looks like a flag at this point. And we're going to end up with daily ranges similar to today, most likely. Apple, this is one, remember, outside of the weekly expected move. Now trying to go back in it. Big move coming from Apple right there. A little bit of buying up there. Tesla down here towards that level, 154.78. We've been talking about, see if we can buy back up as it is outside of its weekly expected move as well. So pay attention to that going forward. Amazon, though, see if this can curl up. I'm leaning towards some kind of bounce, but I think it is going to create a lower high because that was nothing. That was nothing. NVIDIA actually is flagging here at this point. Like you could say this is flagging like this. So you have an argument down, say you're flagging. You have an argument up, say you're flagging like this, and you're going to see another strong move. We'll have to see. I'd like to see a cup handle, get some good structure in here, left head and right shoulder there. Just kind of a strange talk though. AMD seeing positivity. This one looking a little less flaggy, more like a bull flag on the 30-minute here. Got to see if this can turn up. It's about to go positive, so the positive move needs to come like now. This is when you'd most likely see it from AMD. Don't necessarily want that to roll the other way. See if that 2 hours confirmed yet. Let's see if that 2 hours confirmed. We got that confirmed a couple hours ago. But on a red bar, we'd like to see a strong green one and then see that continue. Maybe get a little head and shoulders like this going forward, right? So that's what I would see there. Meta, just turn up on the 2 hour would be nice, but this looks flaggy as well. So it's kind of an interesting thing. We're going to have to see. I might have to stay on here for just a little bit longer because we're seeing a lot of stuff that looks like it wants to curl up on the 2 hour, but it looks kind of flaggy across the board here. Google looks okay. Not going to lie, Google looks okay. If I pull up an hourly close to the center line, right, we could see a positive move here, and you're seeing that positivity come in. So very strange that we're going to see that as good news. Maybe we find an area where this fades, but as of right now, things are bouncing. Let's see how yields reacted. I think that's the important part. Look how the yields reacted. Well, we're starting to come down now. This is where, you know, we could double top up here. I was just looking at this on a very short time frame. I was like, looks double top, divergence across the way. You don't really, I mean, that could just mean momentum slowing here. Maybe bonds catch a bid is what I would say. Dollar still going higher. Now, the thing about the dollar that I wanted to point out was all the divergences across the 2 hour or the 1 hour here. If you even open up like a 30-minute or something, you see these huge divergences really close to the center line, kind of saying dollar might go into a negative trend, which could mean the market's going to go positive. Now, if the market's going to go positive, what did we say that was going to happen? 2 hours going to roll down on this this MACD for the VIX. Look what happened. It rolled down on the VIX. Okay, so we might be seeing some positivity, which is what we called yesterday. So I'm glad that we overall pointed out these divergences up here. They're playing out. Okay, let me go through some of these. Gold and silver still moving up. Yeah, your inflation play is on, even though today's data was slightly deflationary, or not deflationary, but not inflationary. Deflationary event, obviously, being recession or something like that. We have to wait for that for deflation. But if we just, you know, pull back, do those kinds of things, see inflation going, you know, heading in the right direction, aka down towards 2%, just know your prices are going to hold up. If you are and that's kind of a big problem that maybe we should talk about is like, they keep saying it was a supply issue. It wasn't a supply issue. It was the demand got so high because everyone got money and we got all these PPP loans, and we are in a American society right now that is super consume. And so when they get $1,000, when they get $4,000, when they get a PPP loan, they are going to spend it. They're going to spend it right away. And that's what then we say, oh, there's a supply issue. But they forced a ton of demand is how I see it. They forced a ton of demand. Oh, good thing we were able to help out with that COVID. No, all you did was made it artificially high. I do feel we might see some buying from dip buyers who felt left out from last week's moves. We could. Now, we talk a lot on this channel about, you know, have we gotten bad news that's really shifted people's thinking? And it seems we have at least a little bit. So I am still thinking there's possibility for a lower high here. Now, if this daily MACD curls up, different story, right? But if this fails, if this would do this for a few days and then that fails to cross and we get some kind of rejection up here, that's what I'll pay attention to. I mean, I'd be paying attention to any test of these moving averages. We're below all of them. So tomorrow I'll say daily expected move. What if that takes us for that reaction to the 20? Remember, the 20 was very important through this move up. So it would make sense for it to be important to move up higher. It would make sense for it to be important for another move down from where we've gotten so far. We want that reaction usually to reconnect with the 5. We didn't necessarily get that today. But what if we get a reaction all the way up to the 20, right? All the way up to the 20, and then we reject off that. That would be telling, because throughout this whole thing, the 20 held you up, right? So if we reject from that, then you'd say, oh, now we're going to ride that 20 down. That's kind of how I would put it. I called 506 on the SPY last night, but after struggling to break out all morning, I just exited the position about an hour ago. That's unlucky. Shake it off. You know, channel your inner Taylor Swift and shake it off. Wait, is that right? Taylor Swift, shake it off. Haters gonna hey. Yeah, that's Taylor Swift. SPY's moving. Oh, but we ran into the first hurdle already. Let's see if we're able to get above this monthly. Remember, the monthly can be used as resistance now. Look at that. Dink! Coming down. We'll have to see if that's able to hold as resistance at this point. But one thing I wanted to look at was volatility still. Oh, volatility actually holding up now. Holding up down here at this level, right by the center line. So you want to see a sell-off. It still can come. I'm gonna go look at my my hedge option. Is 15% worth it? Is 15% worth it? Well, I think we gotta let this 2 hour play out. I think I might hold this for a little bit. It's a hedge at the end of the day. So if this goes the wrong way on me, that's okay. But it's going down right now. AMD, really seeing if this will catch a bit as well. And then the last thing paying attention to is the yields. I think this is very important for today. Now, do we get data tomorrow? Not necessarily. A bunch of oil stuff tomorrow, some Fed speakers after hours. Do we have any Fed speakers during? No, but we do get the 30-year mortgage rate. Oh man, that thing is going to be... The 30-year mortgage rate, that's got to be insane. Volatility starting to buy up from this area, by the way, so I'm kind of keeping my eye on other stuff on the left as well. But let's see that reaction of the SPY. Getting that reaction up, and right when we touch it, boom, we see the reaction back down. We have been rejected as of right now from that monthly. Look at that touch. It's so good. Aren't you glad you have those monthly expected moves? Look at that. Does your course help someone with no experience? I would say so. I mean, so the person, one of the people I had, you know, check it out before I put out there, has almost no experience. They've never looked at charts before, and she was able to understand a lot of it. So I think that you guys would really benefit from it, even if you're new to it. And then, you know, watch it multiple times, back test, do a lot of work, watch videos. It's still more work. It's not take a course and I know everything. It's take a course, apply what I've learned, take a course, back test what I've learned, take a course, watch more YouTube videos about how that person is talking about it. The market companies will bid for our data that will create real income when AI and robots take the jobs. It's the future and kind of cool. I don't know much about that. All I know is we have a 15-minute rolling up towards the center line, and if that rolls down, we could end up down at these levels by end of day. I think the overall trend may continue here, actually, because we're not seeing the VIX drop off enough, and we're not seeing buying up in the individual stocks. As of right now, it just looks like a flag all day. You've built up a ton of liquidity here, so be very, very cautious with this move, because we could see another day like this tomorrow if this just wants to do that. So we could see that by end of day today. We could see some downward moves. What would that give us, though? Hey, we'd get some divergence outside. Negative, right? We get some divergence outside the weekly move. We would test that 20-week moving average. You know, there's not too much bad stuff here. You can just see some kind of bounce, maybe. Yeah, I hope that helps, Crypto Itachi. And you can ask questions. You can come live, ask questions. I'll always, you know, if you take the course, I'm always down to answer questions and things like that. I don't want to leave you in the dust or anything. Now, one thing we could do is maybe do some headline searching. Dude, who is calling me? Someone's called me like 3 times. Bank of America profits drop. Here's the latest. Your yield 5% on Powell's remarks. It hit 5%? Wait, which one? US 2-year. Ooh. That's not good. That's a cup and handle if you've ever seen one, right? Holy crap, that's a big cup and handle. VIX is booming off the low here. So something I'd pay attention to with even my my hedges, if this 30-minute can cross, we can get above 20, and that's where really bad stuff happens. So if this crosses and starts to head up, I will definitely be probably getting rid of that hedge. But that was like the worst speech of all time. Kind of just update. I want to see what the narrative is here. Powell taking longer than expected for 2% inflation, so it looks like probably the direction is down at this point. So what I would do is go across some stuff, see anything that's seen a significant bounce today, even on a 30-minute, right? Just click through, look for anything that's seen some kind of good bounce. Okay, maybe NVIDIA, that thing looks flagging. AMD, that thing bounced. Maybe it wants to come down one more time, and then we see a positive reading later on. Meta can curl down. You want to pay attention to the bottom side weekly expected moves. Google, this could curl down again. Netflix could curl down. I think that looks probable. SMCI had a good bounce. This one here. What in the hell is going on with this chart, man? This is so weird. Maybe. I don't know. You're kind of just stuck in a range, seeing if you can break up, break down. We tried to break up, weren't able to do it. Oh, what the heck? Things look so wonky. Yo. Getting a call like every 5 minutes right now. Let me check who it is, make sure it's no one important. Usually it's just spam call or something like that, but let me check real quick. I'm still here, I'm just checking. Oh. Hello? Hold on, guys. My buddy called. Be right back. Someone left a birthday package outside, so I'll be right back. It's not my birthday, by the way. Well, we're back. All right, what happened while I was gone? Did volatility pump up? I tried to show that real quick. The only thing that's worrying me is the dollar looking like this. That's the only thing telling me, like, why would the dollar drop off dramatically? That'd be interesting. And then you have the yield looking kind of the similar way, so... Oh, gosh. I just burped. Do we double bottom here? Let's look at a 5-minute. Let's not look at a 5-minute. Let's see if the 15 rolls over for the SPY. I'm going to put my camera back up. Give me 2 seconds. If Israel hits Iran, you'll probably see a reaction like we did yesterday. So we got to be very, very careful. Sorry, I'm just starting this thing up. Boom. We're back. It has to adjust. It'll adjust to my face. Yep. There we go. All right, sorry. Oh, sorry. That was a lot. Okay. So I'll have to see what happens from here, but if that 15-minute rolls over, I think you gotta target the bottom side expected move, right? Like, that seems very, very plausible, especially when you have volatility looking like it's gonna curl up on a 15-minute, boom, go positive here. Maybe set up another point to scale into a move if you're looking for some kind of hedge. Well, you know, volatility here looking like it might go up again. So you might be able to hedge once it gets up and for any kind of bounce because volatility goes higher. Fridge reveal. Dude, our fridge is a mess right now, but it is very full of steak in the freezer. Our freezer is packed to the brim. Pretty much our freezer is steak and booby milk. So don't get excited. You guys don't get any of that. Unless you're a bodybuilder and you need it. But that volatility was moving back and forth. People were really trying to guess. HYG. TLT. TLT holding up pretty well here. I mean, regardless of how it went, here's UVXY. This is the hedge, right? So if this pops up again, you can just re-hedge. Perfectly fine. The Dow, what did the Dow think of this? Well, Maiko set up another point of divergence here on a 15-minute. Maybe we need to look at higher time frames here. 30-minute could roll over. Maybe triple divergence is there for it. Maybe. Pretty important place to hold up. Pretty good support there. For the Dow, IWM, you don't want to break through this level. You got big divergences. I mean, flatness of the RSI, nothing too great there. Nothing great setup-wise here. But I just love the rejection off the monthly. I love that look. I love when these really get it sounded weird in my head, so I didn't want to finish my statement, but I love when we gravitate towards these and we get rejection from them. There we go. Now it doesn't sound as dirty. I'm calling it a day. Had major profits and don't want to give up the gains. I like it, Douglas. Very good. Very, very good. We love it. I hope you have a great, great day, man. It sounds like you already are. Countries want to split from the dollar. What if the dollar just tanks and it's like the crash we never saw coming? Just the dollar is 100% just not valuable. And that, I mean, that's not the one no one saw coming. There's people that say that could happen. Oh, yeah. The whole nuclear thing, I was kind of reading into that last night, and I was just like, oh my gosh, yeah, if Iran starts to talk nukes, and then Israel starts to, like, attack Iran's nuclear sites and stuff like that or something, or if a nuke gets set off, I mean, shit, man. It would be, well, there's your depression, right? It would shut down the world economy, most likely. Bruce, come here. Come here. Bruce is the big guy. Who wants to say hi today? You want to say hi? Okay, Bruce. Okay. This is the Bruce. He just went outside. He snorts like a pig. Hey. He's very not balanced. If you can tell from him knocking me around. Hi, Bruce. Down. Bruce. See, even getting down, he like hurt me 4 times. Ow! I think he scratched my titty. Oh. Ow. He cut my freaking leg open. Oh, Bruce. Don't tell Danny. Don't tell wifey. I really like Bruce. She hates him. This is the equivalence of Powell talking about comedians. Yeah, it's just my channel now is a dog channel, guys. We'll flip through. I want to see Tesla if we break through any lower. I don't think Tesla wants to break down. I'm going to say that. Apple, you just look at that flagging from Apple. Apple not catching a bid at all. Amazon pretty much saying, hey, man, I want to go lower. I'd be paying attention if I was part of the Patreon to those weekly expected moves. Because it looks like we may be going down to touch them. Now, AMD still holding up. Interesting. We're getting those signals from the dollar that it could reverse and trend. Microsoft starting to drop off pretty good. Maybe sets up a divergence. So what is Microsoft's weekly expected? A little bit lower. We're around here, so we can go all the way down to here. Well, maybe that creates a divergence. We'll have to see going forward. Google flagging. Netflix, this has earnings, right? So this will be very interesting to see. Thursday night. Thursday night, we'll have to see what happens with that. I think the main thing to pay attention to is like volatility just spiking back up. Curling up on the 30-minute would be bad. Getting above 20 would be awful. Awful. So we'll have to see if the dollar actually is able to reverse trend here. If not, shit, it's just going to keep going. So kind of a moment to be like, holy crap, there's so much that can happen. 1 minute chart, here we go. Let's do it today. We haven't gone anywhere today. Look at this. We haven't done anything. Ooh. Bunch of cups, bunch of handles. Look at that. You know, volatility comes back in and you get a 1 minute chart that looks like this. Jesus. Really? Let's see Bruce eat raw meat. We could do that. We could do that. Oh my gosh, dude. Right now we need... Bruce is getting chunky. What's the SPY gonna close at? I wouldn't be surprised it closed dead in the center. Like this is kind of like a indecision type of day. Dead in the center would make a lot of sense. Pretty much right where we opened up. Just totally like, we have no idea. Like that's just, if we get a daily bar that kind of just looks like indecision, it's just people being like, what? Which according to, according to that speech, I guess, that powwow we just watched, I think it would make total sense for an indecision day. Now, this is very strange, though, to, like, complete the cup like this and then get an extreme handle. I wonder if that would happen. 5 minute goes positive here. It'll be interesting. I want to look at volatility. Yeah, 5 minute not even positive. Divergence down here, so that pop from here makes sense. Can that roll up the 30 minute, the 15 minute? That's what I'd be wondering. Or is that just going to drop off? So that's something. Just keep paying attention to volatility. That thing could scale up pretty quick and we could head down to the weekly expected move. I think if that crosses up, that's very, very likely. If it's not able to cross up, then the 2 hours is going to take it down. My clock says 1:30 because I'm Central Time. Yeah, I'm Central Time, so 1:30. That's right, born and raised. There are people in those flyover states, and I'm one of them. What up? We're pretty chill. We're very, very nice. Very, very nice people here. Like the Chiefs, the nice, they was voted like the nicest fans in all of NFL or something like that. But not a lot of stuff setting up, to be honest. We haven't really picked a direction. We keep like kind of going up, then going down, then going back up to where we're like, yeah, oh no, now we're going down. Here comes the y'all don't really want it, like boom. No singing. Definitely not a Minnesotan. Nah. But I do say soda. I don't. I say pop. Do you guys, okay, let's have a random vote. Let's totally just take a breath. It's good to do this stuff while trading. It's good to just take a breath and be like, let's say something. Let's have a different conversation for a second. Do you say soda or pop? Very interested. Because your boy here said, actually, your boy here says pop. Pop, pop, Coke. You call everything a Coke? If you are, I hate you now, Willow, and I'm never looking at DJT again. Soda. Soda. Oh, hey there. Frizz? Because you're Dutch? Chang, we need to make you some money if you're Dutch and you can go have a feist. They soda now, but it was pop. You said can, Coke. Oh god, you guys who say Coke. If you, how old are you? If you say Coke, I bet you're a little bit. I want to say you're older, like at least 40. Hey, I'm Dutch. You guys should be friends. I don't know what the Netherlands. I am a Dutch soccer fan, as we are still doing nothing in the spy. I'm a Dutch soccer fan. I like the Netherheads. I like the Big Orange. Because I thought my family was Dutch, but apparently we're not. I thought I was. Hansen. Thought it was Dutch. Not. Oh my gosh. Okay, if you guys drink, do you guys drink your pop like out of a can with a straw? Oh, don't get me started on Swedish. No, hands-on. Mine's hands-on. Oh god. These are also going to trade the stocks, yeah. It always comes off as like very femme when I talk like that. It comes off very femme. A little gay. Comes off a little gay. But I have a daughter. And my nan. Straight off the boat, British. That's kind of cool. Handganger Wort. Ulsby Hans, Zun, son of Hans. That's sick, though. You're a Viking, Miles. That's pretty dope. Now, we did see some buying back up, but oh my god. You have to say an explosive move is coming tomorrow. We're kind of bottled up right now. Hey, Umair. How's it going? Welcome to the channel. Right now, we're just kind of staring at the spot, trying to figure out which way this market actually wants to go. Because we just saw pretty much, we just pretty much might as well have watched Jerome Powell and those two dudes sit around and watch, like, I don't know, what's a good movie? The new Mortal Kombat. I like that movie. But no, screw that. The first Mortal Kombat. You guys know what I'm talking about. First Mortal Kombat? Hell yeah. Second one? Hell no. What the f is going on? Powell confused me. I'm sitting here talking about Mortal Kombat during a stock stream. I'm Irish. Irish and Western European was all I know. My brother did the whole 23andMe, and now they have his, now 23andMe has your DNA, which they actually sold. They actually sold everyone's DNA to other companies, so if you guys ever see a clone of yourself walking around, if you did 23andMe, probably shouldn't be giving random companies your DNA. We own part of your island. Should we play Mortal Kombat before the open every day? Dude, what is going on? This is like the most dud of a day. I want to stick around, but it's kind of like, ugh. Like watching paint dry right now. Hey, you're a twin. That's kind of cool. You guys ever trade together? Just whatever trade you take, he has to take the opposite. The government has your DNA too. Both my parents gave theirs to Ancestry, so they basically got mine too. Yeah, Ancestry is and things like that. They got caught selling it. I'm pretty sure to governments. Can you look at Oxy? Let's go have some fun, huh? All right, this guy here. Oof, my headphones turned off for a sec. Holy crap! Overreacting. You got the 20 down here. There we go. I don't like to hear myself talk. It's weird. But you are getting the first down bar, right? This is the first sell-off bar. So any calls at this level I usually don't do. So one of my rules is I don't take calls on a stock that shows a red impression on the histogram on the daily chart, no matter what the smaller charts look like. But we can look at those smaller charts. All right, we're going to look at the 2 hour. Getting near the center line, you have the 20 right here reacting up. We could see another positive move. You do have earnings somewhere down the road here, so be careful with it. But not a lot of technicals to go off of. I mean, if you wanted to, you could say 30-minute goes positive. But as of right now, you look like you're flagging. I mean, this looks pretty flaggy. If I go down to a 15-minute, you're going to see just curling up towards the center line, most likely another push down. So bull side, 2 hour curling up, wait for that to happen. Bear side, well, this 15-minute just builds up to the center line and crosses down. Boom, you're going to see downside, and you're going to take out this low if this starts to break down soon. Just wanted to point that out on this bad boy. 15-minute, something to pay attention to on the SPY. If this curls over, maybe we should watch the 15-minute actually for the end of the day. See if that curls down. Anybody have a pre-made list of Canadian comedians? Want to learn trading? Well, if you want to learn trading, there's a course in the description. But also, if you're new here, I encourage you to go back and just watch some videos and then go have your charts up at the same time. It's something that I used to do to really learn. Was I would watch videos with my charts in front of me on my other screen at the same time. That way, I could kind of look at what they're saying about something, take a note about it, and then look for it on charts from stocks that I like to watch. And one of them was Apple. Apple's one that I really liked to trade back and forth. See if what who the hell's from Canada? Oh, is it? Hold on. Oh, where were you born? Where were you born? Where were you born? New York. Damn it. I thought Andrew Schultz was Canadian. Steve Martin's quality. A lot of the stuff can be picked up. You kind of have to read in between the lines, Willow. But once you take the course, it becomes more obvious. I would say that. Like once you take the course, it's like blatant. It's like this is what you're looking for. Like 100%. This is it. Here's the 5 check marks. Here's this. Like here's what I'm talking. Like when I say, oh, it's going to cross into positive territory, you might be like, oh, okay, it's going to cross into okay, I should pay attention. No, but you need to know why that's important. Oh, there's a divergence. Well, if I just tell you there's a divergence, but you took the course, you're going to know how strong that divergence is. I can't afford the course, got to take what I can. That's perfectly fine. I did the same exact thing when I first started out. I literally watched YouTube obsessively and took notes and looked at charts for hours and hours, probably like 10 hours a day starting out. And then I was just obsessed with it. And I had a lot of free time. I was very lonely. But what's going on now is like once you get to the point where you have a decent baseline understanding, so if you can start to understand my videos really well, it's actually very good to take the course because then you just get told blatantly, here it is, here's what's in the playbook. And it helps. Good, Miles. I hope you're learning a little bit. I hope they are. you know, you're able to take some stuff away from it. But when I can't actually make, I'll get the cord. Hey, that's perfectly fine. 1-4. Versus the rupee. It really looks like dollar wants to turn down from here. 30-minute. It looks like the dollar's going to experience some weakness. And I think maybe our target, sorry, that's a big line. I don't know what I was doing. I think our target of 105 might come into play. Like we may do something like this. So maybe we'll do this because it's kind of bad to look at the short time frames. If the dollar were to pull back, where would it head to? Well, the 5's sitting a little bit around that 105, but if it really wanted a solid pullback, wouldn't it come to this zone, right? Wouldn't it come into this area in here, or maybe like this area right above there, kind of test this level between these two highs? Like I feel like right here would be solid. Just 105 flat maybe. Right here would be pretty good. So we'll have to see. It kind of looks like it's topping out as of today. And you have 30-minute to it. So it just tells me, right? It's like, okay, well, you know, the dollar has potential to go into a negative trend. I have a bit of knowledge about technical analysis. Now I want to learn financial astrology and sentiment analysis. Sentiment, nothing necessarily like that in the course. We go over your psychology of how to deal with trades a little bit, deal with mentals, talk about patience. But if you have a bit of it about technical analysis, then that's solid. I know that a lot of people who have told me they do they've done technical analysis for years. They're taking it and saying, you know, I'm getting emails saying, I have a different perspective now. And that's really good to have. It's actually really good to have a different perspective all the time, right? We talk about, that's kind of the whole theme of Trade Like Water is, you know, be willing for volatility to increase from here, right? Be willing for the volatility to go like this. What does that mean? Well, I'm going to position myself. If this crosses, I'm going to make changes based on that crossing, right? I'm literally going to do that by the end of the day. If this crosses, I'm going to be probably out of any kind of, I had a short on UVXY as my hedge. So this hedge, I'm not going to do that. I'm going to wait for the push and then maybe hedge again later. So you're always reacting to the market. Rolled up on the 30-minute. It just looks so awful. A lot of time when my emo is high, I do the opposite 67% of the time. It works out. 67% of the time, it works. Every time. I know financial astrology. Enlighten us, Steve, with your astrology. I'm very interested. I don't think I've ever looked into financial astrology. I mean, I know like 9-count cell sequences and things like that. I've looked into a lot of that, but that's like patterns. Oh yeah, and the eclipse was recent. Okay, paste it. Yeah. Let's get a let's be a girl and ask for our sign. Actually, dudes do that now too. So sorry if any women were offended. What's your star sign? Like, God, this just like, I'm not gonna lie, man. That was one of my red flags. If a girl ever, like, I was talking to a girl and she just asked what my sign was, I literally was just like, nope, sorry, we're not talking anymore. And I'm a Leo. Shut up. Oh, shit. Oh, that's good. All right, guys, we'll go for about 13 more minutes. I'm going to leave Power Hour up to you guys. And just so you guys know, I'm going to spend some time with the girls. Baby girl had to go to the doctor yesterday all of a sudden. So I'm going to spend some time with the girls after this. And this will be pretty much the YouTube video for tonight. So if you want those daily ranges, just make sure to show up early in the morning. Okay, I'll post those daily ranges to Patreon members, but the daily ranges for the SPY and the Qs, yeah, you'll just want to come a little bit early tomorrow morning when we do hop on. Hopefully I'm here by 8:15 like I try to be, but 8:15 I'll try to go live so you can get those on your charts. We'll just leave it on the SPY for a solid amount of time and then leave it on the Qs for like 5 minutes there. So just know if you join late, just scroll to the beginning to get the ranges. We'll leave it on there for a little while. I know, you guys are sad. You guys are whoa, wait a second. We're seeing some buying here. We're seeing some buying. You know, a lot of people follow the hourly. Maybe we should see if this thing crosses up. God dang. 15-minute wasn't able to break down. What is the Q? Wow. Okay, AMD up 2%, NVIDIA up almost 2%. We got a lot of green going on over here. A lot of green. This trade like water should be easy for you. No one knows when Tesla bottoms, man. Oh, Tesla? I don't know when it bottoms for sure, but I can tell you that this level here, it definitely doesn't want to lose that, or else you're going to go a little bit lower, right? 154.78 we had marked off for a long time. Bruce needs a steak. He wishes, man. We eat steak, and he's right there. Right there, staring at us. Yeah, Bruce Wayne. We'll have to invite Gordon over sometime for you guys to see. We have Bruce Wayne and Commissioner Gordon. I think I'll make like a trade like water sweatshirt with the embroidered thing. I think that'd be very, very cool. Wonder if I did like maybe I should do one of those like pre-sale things, because sometimes buying a bunch of t-shirts can be expensive. Like what? Some of them require you buy like 1,000 t-shirts or something. VIX is trying to retest that trend line. Let's go check on that for a moment. It's trying. It's trying. But the main thing you take away from this is the 2-hour crossing. If that 2-hour crosses, it's not meaning good things for volatility, but might mean good things for the stock market. Amazon does great with custom shirts. Yeah, we'll look at that. Do they do embroidery? That's the thing. One more look at DJT. Okay, sorry about that. God. I swear I muted myself again. DJT here. I was saying, you know, if you believe in this thing at all, you can invest at those lower levels. We're about to hit that zone of $19 and it could go down to 19. I think it was to 19 or 16. And that's where I would more look at this as like belief over time investment. And that's just because, you know, this could perform well just because it's called Trump media. And a lot of the like battle of a business is good marketing, and Trump's name is going to be everywhere. You could say the argument of no publicity is bad publicity type deal. So, and you got to think half the country loves the guy. So we could see this come down to this area and then just go higher. But I would say more of an investment here, not necessarily anything for an option. Oh, JS has someone that owns a printing or screen printing. Yeah, I've done the screen printing, and the thing is I really want like embroidered stuff. I know, isn't that crazy? Like 2 weeks ago, we were talking about it, up in these areas, and then I was like, man, I'm going to give you 2 zones. If it doesn't hold up at this low, we're going down, prided here, and it's already almost there. Like, that's kind of crazy. It's almost like you kind of wish you were just like, let me short it for fun one day, and then you look back and you're like, oh, sick. TLT actually getting a little bit more of a bounce here. I wonder if these will start to fall off. But the VIX pushing down lower. It beat that low. It's still a series of lower highs, lower lows. But probably the SPY on the 30 minutes, what we just want to pay attention to for the last little bit here. We got one rejection from the, we might test it again. We got one rejection here. Let's see if we can find 2. My hedge coming in handy right now on that UVXY play. 24%. Like I said, I have this option for a few weeks out, but there is no way I'm holding it a long time. It's UVXY. I don't play around with that. But since I do have the put side, I can play around with it. So that's something about UVXY that we haven't talked about. If you guys want to talk about UVXY, do you guys want to talk about UVXY with the puts for a second? So I have puts on the UVXY right now. I've had it since yesterday at the end of the day. Ooh, gosh, damn, this thing just moving right now. Yo, my leg hurts, Bruce. Ow! All right, that's a little bloody. Oh, I let Bruce see the stream. He got excited. And I told him to get down. He just got down how Bruce gets down. Because SVXY it can print, right, but it has decay in it. So I'm more doing the opposite. I'm going with the decay. So the reason I'm doing that is because if you think about it logically, you're like, oh, well, this thing decays automatically a little bit every single day. So if this thing just keeps going down, if the SPY keeps going up, this has decay in it too, so that's going to ramp up. So really, it'll be when the SPY hits the point where this low was made, it's actually going to be a little bit lower. That's my thinking with that. It does not have decay. UVXY has decay. Oh, SVXY doesn't. SVXY. Yeah, SVXY. This one doesn't have decay in it? Are you sure? Let's check. Let's check. Oh my gosh, maybe it doesn't. Oh my gosh, it doesn't? This doesn't have decay? That is what? I always thought it did. Okay, hold on. We gotta look this up. We gotta look this up. We'll put it on the SPY, but I'm looking it up. Oh, okay. That makes sense. Interesting. That's kind of cool. Yeah, that's cool. I'm gonna check it out. Investors seek to probably decrease in the expected volatility of the S&P 500 as measured by the prices of VIX future contracts. Okay, intended for short-term use, investors should actively manage and monitor their investments. Wow. Okay, so apparently, so you're right. Yeah, so VXX decays over time, SVXY rises over time. That's pretty cool. Okay. I get it now. I gotcha. That's pretty awesome. Super choppy, yeah, but A direction might be decided right here. If this 15 can go positive, it's looking decent. Along on SVXY when volatility spikes. Yeah. Or by call. Or yeah, I see what you're saying. Bullish climb since last night expected here. All right, so we'll have to see what happens from here. Remember what you're paying attention to on the SPY. Probably a 30-minute. Then you want to go look at an hourly. Then you want to go look at a 2-hour. See if those are able to confirm moves higher, and you'll just see price keep ticking up and up and up. So good spot to take a chance as you are seeing that signal over on volatility. Qs, you're going to see the same thing, right? We're coming up into probably an important area. The Qs don't necessarily have that resistance of the monthly above them, so I would keep that in mind. They don't really have that. It would be interesting to head up to this level and back off, but it would just be nice that we don't end in the center here, because then these daily expected moves won't change too much. Apple, finally something happening here. This just looked like a straight across flag. Sorry, I ate some ramen for lunch, but good ramen. But it right here looks like a flag, so 15 minutes gonna look real like it wants to curl back down, but we're seeing a positive move. See if that curls up. You're pretty close still to positive territory, just like 3 hours maybe, and you're in positive territory, right? So doesn't look too bad. Tesla, this one's rough. This one's rough, but you're probably due for a bounce around this area. We said, 154.78 actually could be an area where we get a full bounce from, right? We said that. Now you are getting this crossover on the daily MACD. I don't mess around with that, especially before earnings, so I won't be trying to call anything with this, but I will be paying attention to it if it forms a divergence, maybe after earnings, because I'm not going to try to guess what's going to happen on that 50-50 flip. Now, Amazon, this is coming down into test of the 20. What have we done? We've ridden the 20 all the way up. So just doing what Amazon does, and we're going to see probably some more wonky buying. I think the 2-hour here is what you want to curl up, though, as you are looking a little bit flaggy. You want to see if this can curl up. Now, does that create a divergence and something, or does that create the lower high we've talked about, actually? So lower high looks like could be in play here on the shorter time frames in the 30-minute and stuff. That would make sense because it's harder to get into positive territory now. But we'll pay attention here, see if this actually does cross. If it crosses, positive move. Okay, crosses on the 2-hour, that's probably not going to happen. We're probably going to test or go higher. Okay, pay attention to that. NVIDIA trying to climb back up. This 2-hour rolled over, but remember, brief rollovers, we don't like those. We had a strong move down. We just stopped on a dime and started to go up here. So it looked like right at the close of the day, we could have looked at the VIX, towards 230, been a Patreon member down in the description and been like, hey, he's showing me the sign of the VIX. Maybe I want to take some off of the table down here. That way I can take some profit and then play with house money. Oh, we get a bounce. Okay, I'm going to go out. I'm going to wait for that 30-minute to curl back down, right? That would make a lot more sense from here. Now we are starting to build back up. Maybe this is some kind of ABC, so we could head up towards the weekly expected move upside. Pay attention to that on Patreon. AMD curled up on the 2-hour. You got divergence across down here. You have daily divergence, or not daily divergence, but a daily that could roll over because of that. So if we see a strong move from AMD, it's still looking like a lower high, unless that's extended for quite some time, because you're pretty down here into negative territory. So if you come up like this, we could set up that head and shoulders. A strong move like this, you cross up for a brief moment, and then that just crashes right down. It looks like that could be the scenario unless earnings are just great. Only 66 likes, yeah. Let's get through these. Let me get through these real quick. Let me just bust through them before my brain gets super distracted. Now, Meta confirming something pretty bad. It's confirming this divergence, saying the momentum is overall down. That's why I think maybe a short-lived lower high might be on the table here. Looking at a 30-minute curling up, I think 2 hours are going to be what I'm going to be paying attention to the most with this flaggy behavior. I want to see if that's actually going to cross again to the upside, right? Cross, get some upside as the SPY is moving a little bit higher. So we want to see if that actually does cross and head up from there, because that would be telling that it's going to test this higher, go make a new one at that point. Still looks pretty flaggy, right? Still looks like just a overall extended flag in here. You see it. It's pretty pretty controlled is what I would say. So if it wanted to break higher, you know, this is pretty simple, right? Sees the head and shoulders, boom, 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 left head, right shoulder to head up. If it wants to break down, well, that daily's telling you this is going to be an ABC move down. Microsoft, this guy needs to curl back up, needs to get back into this wedge, or else it's going to be bad. So Microsoft really needs to buy back up into this area and then make another strong move, because if it just comes up and retests or flags out from where it's at right now, we're probably going to see another drop lower. Google, similar story, right? It needs to buy up, and it is as of right now. So if that 2 hour curls up, we can do this, extend it into the end of the week, and then maybe we see that ripped away soon. Netflix, we have earnings, so let's go over this for a second. Right now, you do have a head and shoulders posted up here. We'll have to see. Most likely what's happening here is you're going to see price do something very crazy, like get really tight, right? Do something like this, and then we'll see, is that going to break up or break down? And then earnings will make that decision for you, really. If it's going to head up from here, this 2 hour is going to have to curl up right now. So if it does head up higher, you might set up a divergence before Netflix earnings. That's something to pay attention to, as we are looking like we might cross up really, really close to positive territory. Last thing to talk about here, the VIX really dropping off, just getting this confirmation of the momentum trying to shift down on the MACD. So I would pay attention to that. You had divergences across the board all the way over here. You on the RSI, you had divergence in the near price action on the 30-minute. That's why we're pointing out possible upside. All right, so that's pretty much all we have to pay attention to right now. It seems like TLT catching a small bid. That could be flagging. 10-year still higher at this point. So tomorrow we don't really get data or anything. So that'll be very interesting to see what happens moving forward. Oh my God, Tesla, I just checked. What the So it is power hour, and Luke's gonna go maybe take a power nap. I mean, dad's a little tired right now. I woke up at like 5 a.m. So I just wanted to say thank you guys so much for joining. I hope you guys enjoyed the afternoon stream. Sometime soon we might be adding a membership so that we can do some afternoon streams, maybe on like Wednesday afternoons and Friday afternoons for members only here on YouTube, since some people are interested in that. But I just wanted to say thank you for joining. I appreciate you guys coming every single day, liking and subscribing. That's great. Anyone who's taken the course and you come in and you say it's really working for you, Luke, congratulations on that. Really appreciate you saying the nice words about the course. It means a lot. It's down in the description, and Patreon. Patreon's just a useful thing, and I'm going to post those daily expected moves to Patreon later tonight. If you need those daily expected moves for tomorrow for the SPY and the Qs, just show up. Make sure to show up. I should be on by 8:15, and I'll give you guys those expected moves for the SPY and the Qs in the morning. But I just wanted to say thank you guys for joining, and I hope you have a good power hour, all right? Peace.